So this week I want to highlight a topic I've started seeing pop up more recently, and that is mortgage rates. Now, since around late October of this year, rates have started coming down, and there's growing anticipation that they are going to continue coming down in 2024. And as a result, many people are starting to predict homeownership will become more affordable in 2024. Now, while I agree this could help some buyers, I think we also have to make sure we are considering the entire equation when discussing affordability. When people use the term affordability, most of the time they are referring to the monthly payment. That is what they have to pay each month, and most people determine whether or not they can afford the house based on that figure. Now, obviously, this is disregarding cash transactions, but in this video, I'm going to highlight mortgage rates, so we're going to talk about people with mortgages. So the monthly payment is made up of two main variables, the interest rate and the price. Yes, taxes, insurance, etc., but for the sake of this video and simplicity, we're going to set those aside for a moment. Looking at the rates alone and saying that lower rates is going to make homes more affordable, really, in my opinion, doesn't quite tell the whole story. We have to consider what happens with prices as rates decrease. Almost always, as rates go down, prices are going up because buyers will be able to afford more as rates go down. I believe that is going to bring more buyers flooding back into the market, which will increase demand and cause home prices to increase once again. Therefore, the monthly payment will really likely either hold steady or even go up in some cases, but it's highly unlikely to significantly decrease in most cases in 2024, in my opinion, right now. In today's market, there's really one true variable that is going to determine when and by how much prices are going to come down, and that is inventory. Whether mortgage rates go to 10% or 3%, if we continue to have the low inventory levels that we have right now across most of the areas of the country and that we've had for years, prices in general are not going to fall. So far, there's no indication either of any widespread major increase in inventory coming anytime soon, so we have to keep that in mind. Now, one final note on mortgage rates and inventory: there is likely a large amount of homeowners who want to move but are waiting because they locked in a low interest rate over the last few years and they don't want to buy a new house that would then give them a higher rate. Makes sense. Some predict that as rates decrease, now it will incentivize these homeowners to pull the trigger, which in itself makes sense, and that will increase inventory. Now, I agree with this to a certain degree. It will create activity in the market. I do think it'll incentivize people to move, but I do not see it becoming a large source of added inventory because most of the sellers who list their home will end up buying one in or near that same market. So for those situations, the sale of their house and then the purchase of the new house will cancel each other out and not really add to inventory overall. It'll be a net zero effect. For the few people now that move out of state, that sell their home here and move somewhere else, that will add to existing inventory and that will help, but I simply just don't see there being enough of these folks to make it a measurable difference in the market to change the dynamic. So deciding to purchase a house is highly subjective. It's an individual decision, and it really just depends on your finances, your goals, lifestyle, etc. So this is not a video to tell anyone, you should buy now or you should wait or whatever. If you can't afford the current monthly payments that you're quoted right now, don't buy. I would not suggest it. You do not want to be stressing over making your payment each and every month. So it'd be better to just wait until you're more financially ready to do so based on whatever type of house you're looking for. Now, if you can, however, afford the payment now, but you think you'll get a better deal waiting until this next year, waiting until the spring, because rates will be lower, I think that is going to backfire. For example, let's say you purchase a house now, let's say you can make the payment without stressing. It's higher than what you'd prefer though. If rates do not come down, you still likely purchased it at a lower price now than what it probably will be in the spring market. If rates do come down substantially next year, there is a potential chance you may still be able to refinance down the road and lower your monthly payment. I would never bet on that. I never bet the house on that, but it's a possibility. Because you can never change the price you bought it for. There's a potential chance you could refinance down the road. So long story short, buyers, they may feel an increase in affordability in the short term if rates continue to decrease in 24, but it's probably not going to last long because prices are going to adjust until inventory increases, and we see no real indication of that coming. All in all though, I always tell my clients, do what's best for your specific situation. Like I said, if you have questions or you're not sure, feel free, you can send me a message. My contact info is in the description below. But just keep in mind that affordability has a lot of different variables, or at least multiple variables tied to it, and rates are only one part. So don't use rates going down as a reason alone to wait and try to time the market in the spring, because you're going to have a lot more competition. There's going to be a lot more buyers in the market, and that has a very real chance of pushing prices further up beyond the prices where many people already feel that they're inflated right now. But it's just supply and demand. If we don't have the supply and we have increasing demand, which usually happens in the spring, especially if rates are going down, it's going to likely push prices up. So keep that in mind. If you have questions, reach out, and I'll see you in the next video.